The Clarity Act just cleared the Senate Banking Committee.
I would say we were building as if it was coming. What we saw with the Genius Act is that it didn't really change anything for us in terms of whether we can use stablecoins or not, but we started to see a lot more big institutions starting to embrace it, and we expect that same thing to happen if the Clarity Act fully passes.
One of the most contentious issues in the bill, in the Clarity Act, is stablecoin yield.
There is a possibility that stablecoins and blockchains can replace banks to some extent, and I can understand if banks are not thrilled about that. We believe that some banks may embrace it, and they may start to embrace blockchain technology, and it might make them better products as a result. Some banks may not, and it may lead them to become irrelevant or redundant.
Is there anything to the bill that you would like to, improve before it goes to the president's desk?
Something that I think is not talked about enough is
Hi friends, I'm Ciccomascolo. Thank you very much for joining today's chat with Sami Start, who's the co-founder and CEO of Transak, which is a developer integration toolkit to let users buy and sell crypto in any app, website, or web plugin. Sami, thank you for joining Ciccomascolo today.
Thanks for having me. Good to be here.
So let's start with this chat. The Clarity Act just cleared the Senate Banking Committee, and with two Democrats crossing the aisle. Does it change Transak's US strategy in the near term, or were you already building as if it was coming?
I would say we were building as if it was coming. The more of this legislation that passes, the more clarity that comes, and therefore the more big institutions that come. But a lot of this stuff has previously been kind of in a gray area for a long time. And what we saw with the Genius Act is that it didn't really change anything for us in terms of whether we can use stablecoins or not, but we started to see a lot more big institutions starting to embrace it, and big companies having stablecoin strategies that brought a lot of momentum to the space in money movement. And we expect that same thing to happen if the Clarity Act fully passes. And so I would say we're not only ready for it, we're excited for more adoption.
One of the most contentious issues in the bill, in the Clarity Act, is stablecoin yield. As banks fear it could drain deposits, while crypto firms say rewards are only triggered when stablecoins are spent. Where does Transak land on that debate? What do you think about that?
Well, there is a possibility that stablecoins and blockchains can replace banks to some extent. And I can understand if banks are not thrilled about that. And we believe that some banks may embrace it, and they may start to embrace blockchain technology, and it might make them better products as a result. And some banks may not, and it may lead them to become irrelevant or redundant.
And is there anything to the bill that you would like to, improve before it goes to the president's desk?
Anything to improve? Well, something that I think is not talked about enough is more clarity around utility tokens, and whether a utility token such as Uniswap token can have some kind of revenue function. And I believe that too much of blockchain tokens is around speculation, and there's not any real conversations around what is the actual value of a blockchain token. With a stablecoin, the value is clear. It's backed by USD. And with Bitcoin, the value is quite clear. It's a digital scarcity thing. And as you start to get into other tokens like Ethereum and Uniswap and other tokens that have clear utility, I would like to see more conversations around how do you actually value that token. With a stock, you value it through some kind of discounted cash flow analysis, where that stock yields cash flow to its investors. With blockchain tokens, I think it's such a dirty conversation now because of all of the ICOs and all of the speculation and all of the casino aspects of the industry. And I would like to see a more mature conversation around that, and acknowledging all of the bad stuff that's happened, but also not throwing the baby out with the bathwater, and having a conversation about what blockchain tokens really can do.
Moving to the other side of the ocean in Asia, you have now over 600 app integrations and 10 million users with Gobi partners invested last month. And its investment is specifically to push deeper into Asian markets. What does winning in Asia look like in the future? I mean, it is volume, licenses, or partnerships?
We measure success generally by volume and revenue. And at the end, that's the thing that's really hard to fake. People, they want to talk about, crypto adoption indexes and impact and all this kind of stuff. And all that stuff is great. But at the end, you really want to see volume being done because that shows that people are getting value from this. Now, Transak has been doing a lot of expansion in a lot of countries. And some countries, it looks very similar. When you're doing UK, European countries, Australia, Canada, USA, people use crypto in very similar ways. As you start to get into regions like South America and Asia, and let's talk about Asia specifically, you have to think a little bit about the first principles of how this is actually going to work. One thing is whenever we switch on a country, all of our partners, including MetaMask, Trust Wallet, Phantom, all of the major applications that are using Transak, instantly get that distribution. So that's a quick way for us to get to market. However, you also have to think about countries like Singapore or Hong Kong that have not a lot of retail users. There's like order 5 million people in the country itself. So, but there's a lot of corporate flows there and a lot of money movement that's happening on a corporate scale. So, kind of rethinking the strategy from first principles of starting to get into some of those corporate flows and what distribution looks like in those countries, what localization looks like in those countries. How do people do KYC? How do people like to pay? Is it a pull payment? Is it a push payment? Rethinking all of those things from scratch.
Let's get back to August 2025 last year when you closed your $16 million round. It was co-led by Tether and IDG Capital with nearly 30% of your $2 billion in processed transaction already coming from stablecoin flows. Having Tether as a strategic investor, does that create any tensions with already existing infrastructure for the whole market?
No, I wouldn't say so. We were pretty clear with Tether from the start that it would be a very neutral relationship and that we would continue to be agnostic on what stablecoin we support. And, we continue to support all of the stablecoins, including USDC, including some of the lower cap stablecoins. And we also believe in a future where there are many stablecoins and applications have their own stablecoins. And Tether was never put any pressure in any way for us to not be neutral. And so, they're a great investor in the sense that they're very well connected and they're very well respected in the industry, and they are the market leader in stablecoins. But it certainly hasn't had any negative effects for us.
Okay. Stripe added the stablecoin settlement in 2025. Visa and PayPal have all moved into the space. Stablecoin transaction volume jumped in February this year. At what point does Transak stop being infrastructure behind these giants and start competing with them directly?
In a sense, Transak has been competing with giants indirectly for 7 years. I mean, we compete indirectly with crypto exchanges. We compete indirectly with banks. Now you can say we compete indirectly with companies like Stripe, PayPal, Revolut. If you define competing as moving money in between crypto and fiat, it's a very, very broad field to look at. I practically find that not useful to think of competition like that. And instead, I actually think of it as very complementary. When these people come in, it's very complementary for us. It brings a lot of attention to the space. It brings a lot of action to the space. And that gets other complementary things moving that helps us to build more business. The way I think of competition is if someone is coming to our customers and trying to entice them to go with them and switch off our services, to me, that becomes like a direct competition. And that happens sometimes with some of the names you mentioned, but not a lot. So I tend to put the company focus on building and capturing new markets rather than worrying about being outcompeted by them. And there's a lot of things that we do that that are very specific and focused that these guys are not even thinking about.
Just remaining on the stablecoin. Stablecoin payroll is emerging as one of your best enterprises use cases with 225 businesses integrating stablecoins into payroll last year. Is that a category you're actively building for, or is it just an organic pool from partners?
It's something that we are actively building for, because our product at its core is always moving money between fiat, so dollars, pounds, euros, and crypto, Bitcoin, Ethereum, or stablecoins, USDT, USDC, etc. But that product looks very different in different scenarios. So let's say you're doing a fiat on-ramp in MetaMask, then MetaMask as an application, they don't want to touch any of the KYC data. They don't want to touch any of the flow of funds. And you're going to handle all of that. Well, Transak is going to handle all of that in that case. Now, if you take a payroll application, the product flow looks very, very different in the sense that there's probably some kind of KYC that's already done on the user. And in this scenario, it's also a third-party transfer where the originator of the payment is a company, the beneficiary of the payment is a employee, a person. And then you also have the concept of virtual accounts. So having a dedicated bank account details for that user, where whenever money is sent there on a regular basis, which allows the recurring payment aspect of payroll. And even though it's still the same product, which is just a fiat on-ramp, we've had to build from scratch a lot of the parts of our product and to make them more modular. Modular meaning you're breaking a fiat on-ramp into its components, which is authentication, KYC, risk, and payments. And also more white label and API based, which means that it's happening more through backend API calls and less through our user interface. So in some cases, users may not even see Transak user interface at all. It's all just happening through backend API calls that are happening from that application.
You started Transak in a period when moving between fiat and crypto was broken. Now it's becoming mainstream financial infrastructure. How does your job, the job of CEO, change when you go from a fiat or ramp startup to regulator payment blackboard?
Well, the very early days of the company was very tough in a different kind of way, because I was starting this company, and the thesis was that in the future, applications are going to build using these new financial rails, which is blockchain. So the very first thing that I started doing was I started speaking with customers, trying to validate this problem. And the second thing that I did was started working on licenses and banking rails. And then the third thing I started doing was writing code and building the product. And then it really took around a year to actually start getting revenue and transactions and volume. So the first year of building the company was very painful in the sense of, am I doing the right thing? Is this just some crazy pipe dream? And then once we started doing our first transactions, that was in the beginning of 2020, the year 2020, it took off very quickly. So the year 2020 was the year of COVID. It was also the year of Wall Street bets and stimulus checks, and people were buying a lot of crypto. And our problem very quickly went from, is this something that people want, to we need to scale this thing as fast as possible because we can't keep up with all of the demand. And so pretty much in the 6 years since then, we've been building our systems to become more scalable, to become more compliant, to become safer, and and then also building out our APIs to fit more and more use cases. And I feel like we're just getting started as well now, where, you've got Mika license coming out now. You've got Genius Act, Clarity Act. So, we're continuing to build the fundamentals, which is having local entities, licenses, banking rails, having compliant infrastructure, investing in building that in a scalable and an easy to integrate way.
Well, you mentioned Mika, Genius Act, Clarity Act. After all of these frameworks, all of these regulations, I think that stablecoin became, moved from a crypto product to mainstream financial infrastructure. What does this kind of transition mean for Transak, both operationally and competitively, over the next 2 to 5 years?
What it means for us is that we're starting to see more use cases that are to do with money movement and money movement instead of buying crypto as a speculative asset. That part of the industry still exists, where people want to buy Bitcoin and they're treating that as an investment in the same way that you would buy gold, and you would treat that as an investment and hope that the price goes up relative to the dollar. But we're now seeing a increasing number of use cases where people are, or applications are using stablecoins and blockchain as a alternative system for moving money. And the user doesn't even need to know or understand that crypto or blockchain is there, but they're just using the blockchain as an alternative to Swift, or as an alternative to ACH or SEPA, or whatever is the payment method that would have been used otherwise. And to me, that's very, very exciting, because it means that the market size is going from buy crypto, which is a big market, but it's a niche market, to all of consumer retail finance, including banking, including remittance, including payroll, including loans, including everything. Every consumer financial application, we believe, is moving onto the blockchain rails. And we believe that a lot of that can be powered by Transak, because people don't need to be building all of that infrastructure themselves underneath the hood. So our strategy is very much aligned into empowering those applications to do that, and helping them to do that with easy to integrate tools.
Okay, just one last question for you. Coming back to the regulatory matter, if the Clarity Act passes with bipartisan backing, what kind of new products is Transak going to launch that could be not realistic with the previous regulatory uncertainty, especially in the United States?
It's a great question. So with more clarity around what is compliant in blockchain, what is compliant in decentralized networks, something that I've always thought about with Transak is, Transak at its core is a centralized Web2 infrastructure. We are in the blockchain space, we are in the crypto space, but most of the infrastructure that we built is things like regulatory licenses, banking relationships, entities, like centralized entities, centralized recon and sending of payments. However, there are some parts of Transak that do lend itself to being decentralized over time. And this is something that in the current environment seems overly risky and not something that we would really want to do. But with increased clarity, it's possible that there may be some parts of Transak that we decentralize. Definitely not the whole thing, but let's say maybe around 20% of our systems could be decentralized, and that would make us more aligned with the Web3 ethos and more aligned with the long-term vision of what Web3 is supposed to be.
Perfect. Thank you very much, Sami, for your time and for your great insights. And thank you again.
Thank you.